Hello everyone, it's Friday, July 11, and today we're taking a closer look at the euro and British pound charts to assess potential market moves. The European currency came under heavy pressure on Thursday as traders digested a mix of lackluster economic data. German consumer prices for June came in flat, failing to show any further inflationary momentum. Meanwhile, Italian industrial production dropped by 0.7% in May, though this release had little market impact. Later in the day, attention turned to US macro data. Initial jobless claims came in better than expected, providing further support for the dollar. Remarks from Fed officials also made headlines. Mary Daly reiterated she's still comfortable with the prospect of 2 rate cuts this year, but her dovish stance did little to dent the greenback's momentum. Instead, the real driver appeared to be U.S. President Donald Trump's renewed trade rhetoric. On Thursday, he escalated tensions by threatening a 35% tariff on Mexico and suggested similar measures could target other nations that have yet to finalize trade deals with the United States. This comment sent a fresh wave of risk aversion through markets, triggering a broad sell-off in risky assets. Even the British pound was not spared. Despite a preliminary trade agreement with the US, sterling weakened in tandem with the euro, dragged down by the dollar's broad-based strength. Now let's take a look at today's macroeconomic calendar, which features a batch of key data from the UK, including GDP growth for May. The British economy is expected to have expanded by 0.1%, following a 0.3% contraction in the previous month. If the figures surprise to the upside, demand for the pound may increase, potentially slowing its recent decline. Given that sterling has come close to an important support level, which is a one-week low, weak GDP data could result in its breakout and drag the currency further down. In addition, traders will keep an eye on UK industrial and manufacturing production data, both forecast to show a modest 0.1% decline. The trade balance is expected to remain negative. Overall, the weaker-than-expected data could reinforce downward pressure on the pound. Across the euro area, France's Consumer Price Index and Germany's Wholesale Price Index are also on tap. However, these releases are unlikely to have a major impact on market sentiment. As for the United States, today's calendar is relatively quiet, with no major economic reports scheduled. This means that much of the market actions will likely take place during the European session, after which investor focus could shift back to political headlines, particularly comments from Donald Trump. Notably, the US president has recently hinted at a decision regarding potential sanctions on Russia, saying he would soon respond to proposals from US lawmakers. Any developments on this front today could inject volatility into the market. Turning to technical analysis, the 1-hour EUR USD chart indicates that a decline followed by a false breakout at 16.53 or 16.23 could present solid buying opportunities, potentially lifting the euro toward 1.1707. A breakout and firm consolidation above this level would open the door for further upside to 1747, with the next target set at 1787. At this level, I would consider short positions on a rebound, aiming for a 30-35 pip correction. Short entries at 1747 and 1707 make sense only in the case of a false breakout. If the bearish scenario unfolds instead, a rebound from the 1594 level could be a good long setup, targeting an intraday correction of 25-30 pips. Speaking of the British currency, it continues to move within a sideways range, though downward pressure remains in play. A drop below 35.35, making a new one-week low, would generate a sell signal, dragging the price down to 34.89 and then to 34.51. At this mark, it would be wise to go long on a rebound, counting on the 35.40 pip recovery. Alternatively, a false breakout at 35.35 would offer a buying opportunity, potentially lifting the pound to 35.81. If this level is reached but fails to hold, a false breakout scenario would create conditions for a sell entry. A confirmed breakout above 35.81 could lead to further recovery toward 36.15, where assured positions on a false breakout would be irrelevant. If sterling extends gains, short positions on the rebound could be considered at 36.43 with an expected intraday correction of 25-30 pips. Wishing everyone profitable trades and a great weekend.